So if you are doing past paper questions and it's before 2018 and beyond, then you all will find questions that are not in the syllabus anymore. So be careful of what you all are practicing. Make sure you all have the syllabus. I always tell students, work with your syllabus. There's 11 sections in the syllabus. Know the section and what it relates to. Your section, the syllabus is like your guide. Like when you buy something for the first time and you have to set it up, it's like your guidebook where you have to put in. No, most people don't like to read that book as an adult, right? But nevertheless, incomplete record was completely removed. However, there are parts and pieces within the syllabus, hence the reason we were doing control accounts, that actually helps you and the examiner is now using. So hence the reason why it is relevant and important that you all practice these things. The last time, day 2, we look at sales ledger and purchase ledger control account. I don't know how much you all grasp on this, but there are 20 marker questions in this. There are part questions in this. They come in between sections. So if you all do not take the time to learn this, then you all are going to have a problem in the exams in June. Other than that, we did a income statement with errors, not with errors, with adjustments. We have to learn errors as well. We did one with adjustments, which is also relevant because that accruals and prepayments don't even call in sole trader. It comes in big companies like limited liability companies. It comes in small membership companies like corporations and societies and so forth. So you all have to know what accruals and prepayments and adjusting entries relates to and how to work with it. Those are relevant marks you all could claim throughout the past paper questions. If you all pull a past paper question today, you all will find how many repeat of a question there is. So without further ado, let me show you all what I have planned today for you all because of the fact that incomplete record as a section of the syllabus itself is no longer there. Statement of affairs used to test a statement of affairs just in case. Statement of affairs is just the same thing as a statement of financial position, whereas the examiner asks you all to show your assets minus your liability. Assets is equal to your liabilities plus capital, or asset minus liabilities equal your capital. It's the same basic thing. So once you know your accounting formula, you all will be able to prepare a basic draft of a statement if the examiner asks for it. It may not be a full statement. They may have something that they bring that they will just ask you to show what is the working capital or show what is the capital in between. So you just have to know what you're working for. Working capital, how is that calculated? Current asset minus current liabilities. So if they ask you to show a draft statement of financial position with the showing how depreciation reflects in your asset, you just show your non-current asset, your cost minus accumulated depreciation equal net book value. So those are the basic things that you are supposed to know, and that is like grounding in your accounting studies, right? So let's look at what replaced that whole section, the entire section that is now a replacement for incomplete record. That entire section is dealing with entrepreneur and payroll. Now, if I could show you the syllabus, I will go to the syllabus and show you all it. But it deals with cash flow projections, if you all didn't do that as yet. It deals with payroll, and it deals with production. Now, I know one of my students actually sent this question for me, and I tell her we will discuss it further because it's a question it's a very popular question in the exam. This is in June 2024, they bring this question. June 24, you skip out 25, and you check 26. There's possibility that this was something new in the syllabus and they tested it only in June 2024. I haven't seen it in any other question, past paper question before. So the possibility exists that they could ask you to do over something like this. Then the cash flow projections, which I hope that you all had practiced in that as well, is something else new in the syllabus, and it's something that they bring since in 2021. I haven't seen an actually full cash flow projection request in any other past paper. If you all have, you all can let me know and we could practice that as well. So moving on with the actual practical part, because this is the most we could do to cover the section 11, is to do the past paper question with the practical. So most of you all may have tried and attempted this question before. If you did, that is very good. But let's look at it together. So question four, part A, it asks you to prepare a production budget. And somebody might see this and they might don't get confused. They're seeing some figures here and they don't know what to do. Prepare a production budget for each of the quarter one, quarter two, for quarter one, two, quarter three, sorry, for 2023. And they give you the format and everything here. Quarter one was January to March, they put units. Quarter two, April to June, they put units. Quarter three, July to September, put units. So if they put units here and a dollar sign, automatically you all should start to think, what am I calculating? Am I calculating things in dollars? No, you all are calculating things in unit. This production that you all going to do, you all are going to calculate it in units. Now, as you read the information, Ariana manufactures a component which is used in the production of cell phone. So they're doing a production of something that is used in a cell phone, not the actual cell phone, right? Sales of the component for each of the first three quarters of 2023 are forecast. Forecast means it's projected. That is what they estimate it to be. It's not the actual thing. It's like when you think, okay, this is what's going to happen. This is how much I want to make in sales, but this is what they forecast it to be. And it may have been based on market trend or customers' demand or how the previous sales were in the past quarters or the previous year, or based on changes in cell phones demands and whatnot, right? Ariana has been operating with a policy, so she has a policy whereby she maintains a closing inventory sufficient to covers 5%. She covers 5% of the next quarter. So which percent? She now has a closing inventory. So you know they're giving you some additional information that you have to think to put down. So you see how incomplete it is. It's not actually incomplete recording, but they're giving you information now where you have to actually calculate in order to put in, right? So she maintains a closing inventory of 5%. I'll put my Y. 5% of the next quarter. So in the quarter ending in December, she would have a 5% as a closing inventory of this. So the opening inventory for January to March would have been 5% of what she estimated to have in January to March. I hope that makes sense. Ariana forecast that sales in the last quarter of 2023, which would be not July, September, but October, December, to be 8,880 units. So you know why they're giving you that? So that you'll be able to estimate what is your closing inventory in the third quarter. So your closing inventory in the third quarter will be your opening inventory in the last quarter. And your opening inventory in the first quarter would have been your closing inventory in the last. And so you go forward and forward. I hope this is making sense to you all, because it's 5% projection of what the amount is in the previous year, one month, one quarter. Sorry, 1 minute, huh? Yeah, the line class. Okay, I thought it was the emergency. So okay, let's move on. So let's look at the question. So how are we going to, what they want us to do is to check and see what will be the production. What's going to be our production for each quarter? Very simple. I created the first quarter for you all already. So what you have is the units to sell. Say in January to March, her sales forecast for 2023. From January to March, her sales is 51. So we have 51. From April to June, her sales is going to be 6,300. So we put in the 6,300. From July to September, her sales unit is going to be 6760. 6760. Right? So what do we have other than that? We have the opening amounts of units that we're supposed to keep for production from the production of the last unit. 5% of the next quarter's sale. So the opening inventory here would have been 5% in December, what they estimated to be here for 5,100. So 5% of 5,100 and let's work it out. So your opening inventories, right, is 5% of the 5,100. which will give you how much? 255. So that your closing inventory, your opening inventory here again will be 5% of 6,300, 0.05 of 6,300, and that is 315. And opening inventory here again will be 5% of 6760, 0.05 or 6760 will give you 338. And because I move around everything, this thing shifts down. So let's move it back up. So the last quarter, will we need it? Yes, we will need the last quarter. Is 8880. So 5% of the 880 is equal 444. So the opening inventory here will be 444. Now, what can you tell me opening inventory in each period means? It also means that the opening in April, June would have been a closing for January, March. The opening for July, September will also be the closing for April, June. And the opening in October, December would have been the closing value for July, September, because the closing in one period becomes the opening in the next period. So I hope that makes sense. So units to sell, if you have to sell 5,100 and your opening is 25. But wait, what are we calculating? We are calculating how much we need to produce, how much we need to produce within this quarter to stay within what we want, what our budget is, right? So you want to stay within this budget. So you want to sell 51, but you started with 255. So how much I'm going to produce? How do I know? How will I find out that? You have to minus your opening from the units that you have to sell to know what is the difference you have to produce. So it would have been 4,845, right? If you didn't have a closing inventory to start with in the next period. So you have to close off with 5% to start off in the next period. So you have to include that 5% that you need to start in the next period too. So you have to add it to the value that you need to make up for your production. So sales less your opening units will give you the actual production that you were supposed to make to sell this. But you have to keep back the 5% for the next period. So you have to also produce that in order to have an opening inventory. You don't want to be running a business and somebody come today and because you just make it a exact amount to sell how much you project and you have a big sale now and you can't even sell, right? Because you didn't have a closing inventory. So you have to produce sufficient amount to cater for the closing inventory. So when you add that to the production that was required, you get a total production for the period. And that was for the first quarter. So for the second quarter, we know the sales. But do we know the opening inventory? Yes, we already calculated here because the closing inventory in one period will be the opening inventory in the next. So that is 315. What do we do to get the value? We minus. So 63, the sales minus the opening inventory will give us what the production units would have been if we didn't have to have a closing inventory. But we do have to have a closing inventory. So what would be the amount that we need to keep for the next period? We need to keep 338 for the next period. So 338 is what we're going to keep. So what our production is going to be is, our production is going to be 6,323. I hope you all are following through. And for the last quarter, we have the sales. Do we have our opening? Yes, our opening was the closing before. So the opening is 338. You need to minus the opening from your sales, your forecast sales. And do we have the closing? Yes, we do have closing because they give us what the last quarter is estimated to be, 8,880 units, which will be a 5% we need to keep back to start in that. 5% of this we need to keep back. And the 5% is 440. So when we add that, our productions. So this was how much marks? I think this was 7 marks. And just for calculating, put put in the same form that they already give you. You don't have to even think about the heading. All you needed to do was to understand what the examiner is saying, see that is units they're talking about, put in the units to be sold, right? You start working with what? Then you're thinking about what it is I'm going to calculate. I'm going to calculate production. So how much do I need? The opening inventory, you have to minus it from the sales. That will give you the amount you really need, but you need to hold back at 315, so you have to add that. And that will give you back your productions. And hence, you will be able to calculate your 3/4 and get your 7 marks. So I hope this was pretty straightforward. The next part of the question was a giveaway 3 marks. I don't understand how they give away these 3 marks here. All they say is the selling price per unit during the budget period will be $8. So your selling price is $8. It's $8 per unit, right? How many units would Ariana plan to sell if she wishes to achieve a sales revenue target for 45,000? So she wants her to have a revenue of 45,000. Now, this is basic maths, right? You want to get 45,000. If each unit is $8, all you have to do is divide. So you have 45,000, right? Divided by $8 will give you 5,625. So that is the number of units. But if you notice, although I know what I'm saying here, I'm writing it down, right? So the examiner will see that I am showing my working. So in units now will be 5,625 units. 3 marks, you can't even take in 3 minutes. That other 2 minutes that you would have, you could put it into a next past paper, next question in order to fulfill your time. So this was June 2024, question 5A. Now, this is one part. Now, remember I told you all that they break down the section 11. They break down section 11 into payroll, production, and cash flow projection, right? So, this was production units, estimate like a budget or whatnot, in June 2024, question 5A. Question 5B now went on to give you the difference in your marks for, I can't remember how much your underneath piece was, but it went on to give you additional marks now for just a simple payroll question. So those of you all who do not know payroll come in regular in the syllabus. You all need, I see big question calculations in payroll, a full working question. All you need to remember in to do a proper payroll question is what is your gross wages? And gross is your basic wage. That is what you're working for. So if somebody tell you, if you have a monthly fixed salary and you say 30,000 is your monthly fixed, 30,000 is your monthly. That is your monthly salary. That is gross. That is before any deductions are taking place. Now, if somebody tell you that a company that you go to work for and they say is $50 an hour, so and you work 8 hours a day, so $50 is your gross hourly rate. And then the 8 hours is your gross hourly hours. So your gross pay will be 50 by 8. And that will give you a gross pay. And that is before any deductions or whatnot. However, for the purpose of exam, what they do is if somebody have overtime, you add it to this base hours. So this is called base hours. You add the overtime and you get an additional figure. So that will be a gross pay. Gross wage or pay is before any deductions start to take place. So when you read the question, read carefully to see when the deductions are going to happen. Is it going to happen after your gross, before something take place? They will tell you in the exam. They will not give you part of information and expect you to get it entirely correct if you don't have everything written in pen and paper, right? So let's look at this question here, which is a next part of the section 11, but just part B of the same question. June 2024, question 5B. Ariana employed, well, looking at what they're asking you first, right? Gross pay. You want to calculate gross pay. So Ariana employed Selena Smith as a production worker. Selena is required to work a 40-hour week. So how much hours per week? So this is our weekly pay. 40 hours per week. And is paid at a rate of $200 per hour. So 40 hours. She's working for 40 hours. And her hourly rate is $200 per hour. Right? So Selena is required to work 40 hours in a week and is paid a rate of 200. Hours work in excess of the 40 hours are overtime. So anything beyond this is going to be paid an overtime rate. But what is it? Overtime is time and a half. Anytime you see in an exam that a rate is time and a half, time is 1 and time and a half is zero point 0.5. No, well, half is 0.5, right? So whatever the time is, whatever the rate is, whatever the rate of pay is, you multiply it by 1.5 because your full rate is like 100%. So rate is 1 and time and a half will be 1.5. Now another way, if you all can't remember that, is whatever the rate is, in this case the rate is $200 per hour, you divide it by 2, which is will give you half. So half is, or you multiply by half, which will give you 100. This is for those who don't know time and a half, right? Time and a half, 1.5. 1 is for time, and half of the time is 0.5, right? For those of you all don't get that. And so therefore, this will be half. So the rate plus a half is equal to $300. So rate plus this half is equal to $100. So therefore, time and a half, the rate will be 300. So her base rate is 200 and overtime pay, her time will be $300. Right? I hope you all see that. Time is base is 200. Time and a half is 1.5. Now, some of you all will understand that very quickly. Some don't. So bear with me as I repeat it. So during the second week of April, Selena worked a total of 44 hours. So total hours work. Her total hours was 44 hours. Her base hours per week supposed to be 40. So when you minus the 40 from 44, you get 4. So time and a half would have been the 4 hours. So her total salary, her gross salary will be the base pay plus the time and a half. So 40 is the hours multiplied by the base rate, which is 200. So 40 multiplied by 200 will give you your base salary. And then 4 multiplied by 300, which is the overtime rate, will give her additional. So 4 twos are 8, that 800. That 800 correct? Oh, $8,000. 40,000. No. 40,000, right? And 4 threes are 12. 8 and 1 is 9, 9,200. So this is me scrapping here as I explain. You all could take your time, do a table. So you want to know how you're going to calculate this. So you could put rate, you could put time and a half. When you're drawing up your workings, rate is 200, right? Her time and a half is equal to 200 times 1.5. So you get 300. You could get the base hours. So you have the base hours is 40 hours. You have the time and a half hours is anything in excess of that. In this case, you could show a little working for your examiner to see. And you can show them that total hours was 44, base is 40, so overtime is 4, right? So you show the examiner, you know what you're calculating here, and you put in the 4. Now, this is not a set in stone format. You all could do it anyhow once it makes sense. So you have 440 by 200, and you have 300 by 4, and you add the 2 together in your little format that you would have drawn up, and you have 9,200 for the examiner to give you your 4 marks, right? And that is 4 marks there, and you show a little working how you come up with the overtime. And you could even, overtime rates, you could even show the calculation for the time and a half, right? And that was 4 marks there. Moving on, calculate Miss Smith net pay for the month. Now, this is where you have to pay careful attention. Now, one thing I want you all to know, if you all calculated this wrong here, and you have to use this down here, then the examiner wouldn't have taken off marks for the wrong answer that you have here and take it off here too. They will, once you do the calculations correct for the deductions, they would have given you the full marks for this part of the question because they already penalize you for the wrong solution on top. So your wrong solutions are not penalized more than once. You lose marks for it once, and moving on, they will give you the correct they will give you the marks for if you do the correct calculations. So for the month of April, you calculating the net pay, right? So for the month of April, Selena Smith earned a gross of 33,002. So she have a 33,200. That's a gross. Gross is what again? The amount before deduction. So she have a gross pay of 33,200, right? National insurance or social security deductions is 5%. Did they tell you it's a 5% of the figure after something else? No, they just tell you it's 5%. So 5% is national insurance, so you have to deduct that, right? So national insurance is 5%. So you all know to use a calculator. Gross multiplied by 0.05 for me is 5%. Income tax deduction is 10%. What you doing? What are you deducting the 10% from? Are you going to minus NIS and then minus the amount for then calculate the amount for to income tax? No, they did not say that. They just say income tax deduction is 10%. So you do income tax 10% and you calculate the 10% on that as well, which is 3,320. Monthly credit union contribution is 300. So that is a fixed amount. Her credit union. Credit union is $300. So you didn't even have to calculate that. What will be her net pay? Her net pay will be her gross minus all the deductions. So what is total deductions? Her total deductions will be her NIS plus her income tax plus the amount that she is going to pay to the credit union. So total deductions is 5,200. Her net pay will be equal to gross minus the total deductions. So her net pay is 27. Right? And that's it. You would have gotten the full marks. Unfortunately, I didn't check to see how much that marks would have been, but I would have assumed, let's see. If here is 7 and this is 3 over here, 7 and 3 is 10, then this would have been 4. This might have been 6 marks. 6 marks might have been for this little thing. 6 marks. Now to me, it's very simple and straightforward. To you, it might be a little challenge, right? So I hope you all seeing. This is entrepreneur. This is the last section of the syllabus so that it combined with payroll and it's combined with production and cash flow projection. So the last question we're going to look at is a very nice question, but I think the examiner bring this question in such a way that students just have to know what to add and what to minus. But in the near future, this question will not come in the format that they give it here. They will come in words scrambled, words and numbers scrambled in a paragraph, just like how they had it here or how they may have had it here. And you now have to put it in the column format. So my advice to you is that this was the first attempt I think they bring. If I'm wrong, sorry, but my advice to you is to learn what cash flow projection is. And just a basic on it. Cash flow projection is basically showing a businessman estimates what his inflow of money is going to be. So you are running a business and you estimate what in the coming 6 months or coming year, what your inflows are going to be based on probably the type of company you're running, based on how market trends are. You could say, okay, I expect to sell 10,000, 20,000, not just selling it, because some companies are set up with providing a service, like construction, they provide a service. So you estimate what is your projected cash inflows, where you're going to get your money from, how much it's going to be. And this is actual cash, cash money itself. And then you have to think about what is going to be my outflows, what are going to be my cash outflows itself. And they might think about, okay, I have to pay the people them. I can't hold back people wages, right? You have to pay salaries. So salary had to be paid. So that is one. I had to pay my statutory deductions, all the NIS and everything else. I have to do that. So that has to be paid. I will have to pay the rent that I own. I go put me out of the building. So I have to pay rental fees. That is a cash outflows. I have to pay expenses. So when the businessman look in the future, and he sees all the inflow money coming in and he compare it with all the outflows, what will happen? Incoming minus outgoing will give you a net figure. And that net figure, you will now determine, okay, that net figure is the figure that will be added on to the next month to start as an opening balance. And that is all cash flow projection is about. When you're reading the question, and the question may not come as this column format here. You will have to take in the information now and plug it in. As I say this, there's another cash flow projection question, I believe. I'll try to find it. If it's anything, I send it to you all on WhatsApp to practice. But you read the question and you take the information and now you put it in this same format. Total in cash inflows, sales or receipt from customers, you add it together. Then you put all your payments and you get the total, you less that from the inflows and you get the balancing. So let's look at the question. Enough of me talking and trying to explain it, right? So as I say, most of the time, practical is the best way to get things running. So quickly, let me just wrap it up. May, June, July. May, June, July. What we have? August, September, October. And then we have the cash sales. We have 30,000. We have 21,000. We have 19,000. We have 25,000. We have 10,000. And we have 15,000. Now I started talking, but did I read this question for you all? I don't think I read it. I can't remember reading the question. Did I? No, I didn't. Okay. So the question states, prepare cash flow projection for foot soles for the 6 month ending October 2021 by calculating and completing the appropriate spaces. So they leave spaces here. You may not be able to see it, but this is a space. This here is a line. So you have to fill in here, right? In the form provided on page 18, so that I give you the entire form. Include all the appropriate headings and labels. So you must be putting in some kind of headings or labels, right? Fill in necessary totals. So they're asking you to put in totals. And include any missing section for the completion of the cash flow statement. So if there is any missing section. So this is them testing you to see if you know what a cash flow projection is and what it is that you're really calculating. All right, so let's look at it. What will be missing and what we're supposed to be putting. So we're doing a cash flow projection. Now you would have put in the proper heading here because there's a big space for heading, right? So you would include foot soles, cash flow projections for the 6 month May to October 2020. Good? So we had cash sales. We had the receipts from credit sales. So you're putting in our 15,000, 11,000, 20,000, 9,000, 20,000, and 16,000. Now I'm not just going to just do this and not let you know what it is we actually putting in here. Let me just increase the font size in this so that it could be a little more easier for you all to read. A little better to read there, right? Good. So what is this? This is money coming in the business, cash sales. Because cash you get receiving. What is receipts from credit customers? Receipts means they give you money. You deposit it into your bank account or you get it in cash as well and you create a receipt for them. That is when you receive money. So the both are inflows. So these are total inflows that you will be calculating here. Total cash inflows. Or let's just put total inflows, right? Because cash inflows, total inflows, same thing, same difference. Accounting business considers both bank and cash as cash. But in your cash flow statement, bank is bank and cash is cash, right? That is just technical terms jargons use. So total inflows, you add all. So when they tell you put in your proper heading, this is what money coming in. Money coming into your business. Now I tell students in my forms and format, one thing that you have to remember with this though, there are no set in stone way to prepare cash flow projection. Some examiners might start it differently, but you look at the format. If there is no format and you remember this one, go with this one. This is very, very simple and straightforward. So you get the total inflows. So you get cash outflows now. You're going to, or payments, right? So in case you want to put a heading in the space in here, and now you have payments to customers, payments to credit suppliers. You have your salaries, and not spelling out the entire thing, right? Purchase of non-current assets. So you have a non-current asset here that you're buying, which is good for your business. You have rent that you have to pay. And you have income tax, which is statutory deductions. So you must pay that. There is an obligation to pay, right? So your total outflows, your cash outflows, sorry, this would have been your cash inflows. So we go in once again. Your payments was 18,000, 14,000, 10,000. You know, I could do it faster this way. So 8,000, 0, 2,000, 0, right? 14,000, 8,000, 0, 2,000. Here, at least here is 2,000 going straight across the board, so I could fill in that right there. All right, here's 15,000. 15,000. Going straight across the board, we could fill it in right here as well. 10,000, 9,000, 6,000, and 3,000, right? And here, did we miss one? So 9 is somewhere here. Purchase of non-current asset was purchased in this period in July, 9,000. And then we have a 25,000 for income tax. Now you notice when they pay the income tax is due at a certain period of time. So it's not every month you will have that. So that is the reason why they expected that. Not every month you'll be purchasing a non-current asset. They estimate to purchase it in that period. So what will we calculate here when we add in all of this? What is it we add in here together to get this total? What total is this? What is this total? This is the total of all our cash outflows or payments. So we put total outflows. So we have an inflow and we have a total outflow. Is that the end of it? No. The examiner wants you to now find out what is your net flows. Your net flows will be the total inflow minus the total outflow. So you have total inflow minus your outflow will give you the net flow for the period. Right? So if they don't have a column, you're going to be doing your columns like this. And I drag across, I will get my formulas. Well, in one period, there was a negative figure. Yeah, they only had 39, but they spent 61. So here you see you have a negative figure. Nevertheless, let's look. That means the cash inflow for that period was less than the cash outflow. However, they may have had a balance bring forward. So did we have any opening balance? Did they start off with any cash? Let's see if they start off with any cash. Foot Soul forecast that the bank balance will be 5,000 on the 1st of May 2000. So they did start off with a cash amount. 5,000 on the 1st of May they start off with. So that would have been an opening amount of cash. You don't have a business that you don't have a cash in that you can start with, right? You must have a little bit of petty cash, or if you're a bank overdrawn, you must have some type of cash, right? Even if it's a negative cash. So you have 5,000 you're starting off with. So if you have a net figure of 17, but you have an opening of 5, then you will have a closing balance of 22,000. So you have a closing balance. So you have an opening cash balance and you have a closing cash balance. And you could put it, for me, I know you could put in cash outflows here because there's a cash flow projection you're all doing, right? So you all got that? So all your inflows, you get a total. All your outflows, you get a total. And when you minus your outflow, well, your outflow from your inflow, you get a net amount. That's what you remain with. You have an opening cash balance, you add that to the net figure to get a closing balance. So your closing balance, remember, all the time in accounting, closing in one period will be the opening in the next period. So you'll have an opening of 22,000 here. So you have an opening amount of 22,000 in the next period because you're closer for this. So now you add again once again. So you have a closing of 30,000 in June month. So that will be your opening in the next period. So your opening in July was 30, but you have a net value of negative 22. Still sum it up. You sum it up together, you get a positive cash flow. For those who know maths, if you 30, if you cannot minus 22 from a positive 30, you take the bigger value, 30,000, and you minus the negative figure, right? So 30 minus 22, you get 8,000 balance. You add 8,000 and you get 16,000 as your closing. Your closing will be your opening in the next period. So when you add that, you get 23,000. And the closing in this period will be the opening in the next period. Right? And for the end October, you had a total cash flow projection of 34,000 at the end of the month. So you all see how sweet and simple and nice this is. Don't forget to do all the headings, right? Because I always stress how important it is. Merge and center cash flow projection for the period May to October. 2021. And we just add in for the 6 months period. Now, let me tell you something. Most businesses, not most businesses, when a company is now set up, one of the requirements by a bank in Trinidad right now is that you must prepare a cash flow projection. And it's simply this, a businessman set up a business, he wants to start running the business, and the bank without the cash flow projection, the bank will not open a business account for you. You have to give them a cash flow projection. And guess what? Companies or business people pays $1,000 to prepare this and more based on the type of it because Republic Bank want a 3-year monthly cash flow projection. So they want it monthly. For 3 years, you have to do a cash flow projection. Scotiabank will take 1 year, month to month. I can't remember how much RBC will take, but this is live experience. I'm telling you all that you have to do cash flow projection in order to get a bank account and for a business that you may set up today or tomorrow. So as an accountant is one of the most important thing for you all to know because without it, financial institution will not open a bank account for a company. So what is the heading here? You need to head it up properly. Foot soles. The name of the company. So you don't want to send this to the bank and the bank watching it and you don't know what is the name of the companies, right? So foot soles. And what did you do? You do a cash flow projection as required by the examiner, right? Prepare cash flow projections. So this is your cash flow projection for the 6 months period, May to October 2021 for foot soles. And that was it. So We beat the time. We are here on time. Let me know if there's any questions. The doors are open for you all this afternoon to shoot away. If there's anything new, if anything you all did not understand in this period of, in this little lesson here, let me know so I can explain it to you all. Anything at all. We looked at production units, right? This is like when you're doing budgeting. So this is like a budget. We look at payroll, gross wages, and then taking out statutory deductions. Now this dealt with one person, right? No questions? Okay. Anybody else have any questions? And then we look at the cash flow projection, which is a critical part of the exam as well. And this, as I say, this come in an actual form already. But in the exam to come, all they may do is use the same thing here and say, well, your cash is expected to be X, Y, and Z, you know, and okay, very good. Yes, Aaron, that is very important. Go over back the cash flow projections. The question is June 2021, just to make sure you all understand that. And if you all could find any more questions to practice, please practice it because they may not just bring it in this formal format section, they may bring it in a written word and numbers like how maths is. You know, sometimes maths come within the question. You have to read and pull out the information. You know how to read and pull out what is your sales and your receipts and pull out where your payments are. So you just need to be ready for that and know that you put all your inflows on top, all your outflows underneath. You get a net figure and your opening balance. Plus that will give you a closing balance that will go across in each period. So the hardest thing to remember is this to the bottom here, which should be very simple. Your net figure, your net flow from this, add your opening will give you a closing. A closing going across each period of time, and you get in an next closing. That's the end of that. The cash flow projection. Yeah, $1,000 you'll get. You might spend an hour and to do that for a company, not even an hour. Once you have the information, it's less than an hour. You're getting it done, and you'll get paid for it when you finish school. Okay, so if that's it and nobody has any question, well, we're finishing a little bit earlier today, but let me just let you all know. We'll be doing suspense, we'll be doing errors, we'll be doing, these are critical areas in the exam. This is a whole section of the syllabus we finished here, section 11. And I want on the last day for us to do a multiple choice question paper. The last day was scheduled to be past paper question. But I want to do a full multiple choice past paper question. And I want to show you all how many questions from this multiple choice past paper repeated itself several times over the years. So when you are looking at all the other years, you all will see these same questions repeating itself. So the last thing, that is what we'll be looking at. Repeated question from multiple choice. So if that's it for you all, thank you all for joining me. I hope this is helping you all in prepping for your exam. Now remember, practical accounting is practical. If you all do not do the practice, you all will struggle in the exam. Do the practice and you'll be a smooth flow. Okay? Well, bye for now until next class. Hopefully I can fit it in Wednesday. If I can, it will be on Wednesday. If not, it will be next week Sunday. Okay, bye.